Everyone, this is Teddy. We are here on June the 3rd with the countdown to the end of the week for some Forex market analysis for you. And before we get into our webinar today, I'm going to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And we got a little feedback coming here. We want to get rid of that. Okay, all right, so before we get into the analysis, I want to remind you to subscribe to our YouTube and Twitch channels, Forex Trading Unlocked, and if you have not done so already, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly, Teddy Keckstead. All right, now let's go to our live action screen here. We got the Forex-Trading-Unlocked.com website pulled up. And by the way, from our navigation bar, from products, courses, and services, you can get the High Probable Japanese Candlestick Patterns page up. And you can check out the book before you buy it or review it. If you are an Amazon Prime member, you can read it for free as well. All right, so the dollar is in play today in a big way. We have a big sell-off in gold. We have oil that is pushing new highs. We have interest rates that are back on their lows, and we have the dollar, which is gaining strength versus most of the currencies around the globe today in a big way. We have a jobs report that came out very positive in many ways. There's some other things that came out that are very positive for the economic outlook, supposedly. Hey, Do Gamers Allen's up, man. Hey, how you doing? Good to see you. Glad you're on the chat. We got a lot to talk about today. I'm sure you've been watching this crazy market action today, and boy, do we ever have some stuff going on, huh? It's pretty nuts. So, all right, let's get into it, and let's see what we got going on here. So, with the Euro-US dollar here, we have a very, very big sell-off going on. Now, initially, we had this sell signal over here. All right, whoops, there we go. This is our bearish engulfing line sell signal. There we go. Make it a little easier for you to see. So this occurred last week, and this is our bearish engulfing line sell signal. Now this is a big, very reliable sell signal. It's a counter trend sell signal going on right now because this market has been a bull for a while. All right, let's put this sell signal. All right, so there we go. All right, so this is what we had going on from last week. Now, we had come back to make a higher move low last, was on Tuesday. We made a lower move high, which then brought us to what? To this day today that we've made a lower move low. So what does that mean? Let's see, how do you get me to sell? Okay. We'll get to your question in 1 second. So anyhow, we made this lower move low here, as you can see. So this is a big deal. No longer are we a bull in the short run. We are now a neutral to bear for sure. So now this bearish engulfing line has already touched into the very short sell target, but that's only if you're talking about for a very modest retracement. So if we get a little bit bigger of a retracement here, as you can see, here's the 50% line right here, and we'll put this in right there. So we've just touched into the retracement zone. So if this is just going to be a minor sell-off, we're pretty much hitting key support right now that the market should bounce up from. If that is not the case, well, then that's a whole nother story here. So now let's look at this for another target rule. So for our 50% line right there, we always like the 50% rule. It's a great target forecaster. All right, so we've already pulled into this first little spot right here. We've already hit this initial target zone. The question is, are we going to get down to here, which I think this is a more likely area for us to correct back to. The main reason being is that the dollar has been in a slump for quite some time. And as you can see, with this upward sloping trend line, by attrition, we're going to fall through it anyhow. But we've now that we've touched off a lower move low after a lower move high, this gives us a good indication that we are now ready to start a longer term correction. All right, so that's what we have going on for the Euro-US dollar. How do you know when to sell when you find a signal? Okay, so that's a very good question. So for Do Gamer Allen, here's what we got. How do you know when to sell? All right, well, there's all different types of systems and methodologies out there, but for this one here, let's say you have the bearish engulfing line sell signal, which is this day right here. So we'll put a little vertical line to represent when this trade would begin. So on this day, once this pattern had formed after the close, that's when you would have your initial entry. Okay, so on that day, the close was 121.19. Okay, so now that would mean that as of the close, after that, you would try to sell around 121.19 or around that target area. For me, when it comes to this type of trade right here, we use this bearish engulfing line here, and we risk the high of the move, which would be from the previous day right there. So this run right here becomes our risk level. So basically a couple pips above it. So 122.70 right here would be where you'd have your stop initially. So you would be selling right around the close of the bearish engulfing line day, and then you would have your stop in above there. Now the initial target for this was right around where actually it's, let's see, what's the low of today? Today's low is 121.27. Yeah, it was 121 like 31 or 32. So that was the initial target for a very short-term sell-off, which it's now touched twice. And now after this, considering that it took out this lower move low after, or excuse me, a higher move low after a lower move high, that confirms a short-term bearish trend. Now that means the hourly and the very short-term daily is leaning towards being bearish. Intermediate and longer term definitely remains bullish. So the trend is still your friend. The longer term cycle highs, swing highs and swing lows is higher move highs and higher move lows. That is an uptrend. So right now we are viewing this as a correction. So this is a dollar correction that is now in full force being pressed today. Now there's a negative reaction off of the job numbers. So I think that there's multiple scenarios as to why that may be causing the market to jitter around like it is. I think one of the bigger problems is the fact that you have oil breaking out to the upside once again. You have interest rates falling on support, and we're going to get into that right now just to give you a little idea. So remember that the futures, now we have the crude oil futures chart up here. The crude futures we have to always show in delay. We can't have that in live or close to real time. That's by regulatory, because of regulatory rules. Now, as you can see, the oil market here had clipped out a new multi-month high as of yesterday. Or as of 2 days ago, and then yesterday it settled up here around around 68.83. Today, right now, it is still trading right around that top area right now. So we're just below 70 bucks a barrel. We have 75 on the way to $100 as our price target. We've been calling for that since Joe Biden was inaugurated. The very first day by executive order, he stamped in. I was saying before that this was going to happen once he's inaugurated. And now the oil platform that we have here is definitely driving oil up to these levels. It is not stopping. Unless there is some sort of shift politically in the United States. So with that being said, that is going to put a lot of pressure on certain Forex markets, especially the Canada, the Japanese yen, the British pound, what have you. These are big, big influences. Then we have the fact that we have the bond market here. This is another thing. The interest rate market is a gap lower this week. So right now it's trading actually a little bit lower. It's trading around 156.05, a little bit lower on the day. But see this gap here? We came off of this higher move low, set a lower move high, and now we are right just trending right where it is right here. So if you look at this low right here, we had a low of 115.14 in the bonds, and here we have a low of 115.16. If we take this out tomorrow, which is unemployment, I know you're wondering why am I talking about oil and interest rates right now, but these are all functions of the trends that are going on right now. Tomorrow is unemployment. We had unemployment claims today. If that number reacts negatively for the interest rates and we see a sell-off, then that's why you're going to see this continuation of this downtrend for the euro US dollar. So we're going to get into some of the cryptocurrencies too as we walk around the world through the currency crosses today. So, but these are things I want you to be mindful of, because with interest rate markets like the 30-year and the 10-year pushing new lows, that means higher rates. That causes strength for the dollar. Now there's going to be a tug of war with oil flirting with $70, and then we also have this little action here, AUDUSD. We have oil, gold that's selling off in a big way today. It's down. What is it? It's down. It's down $35 today. So it's taken out the range from the last week and a half of trading. It's coming off of a higher move high. This is still a bull market. This is being viewed as a correction. However, you can see that the steepness of this trend is pretty strong. So now if we have the boulder base here, but if we really bring it into where, let's say like here, we're really stretching it. This would be here where possibly we drift higher. We would see how this came in. This came in by attrition and then started to rise. This is falling down into it. I would assume that we're probably going to have, at least minimally, a correction in gold. We're close to, if it's going to bounce and it's not going to be a major sell-off, we're right on the key support right here. If this is totally different, oops, let's get the right one here. And let's even just bring it down to here. So we could have this from this little wave up here. Here's another 50%. And then let's bring it all the way down to this major low here. This is the big one. All right, so these are our 3 Fibonacci 50% price targets that we've just pulled out for gold. In the event that the market starts to trickle down here, this is just viewed as a downside correction, but this is a nice little sell-off that the market could use. What would that do to the currencies? Well, we go once back to the Euro US dollar. In the case of this, it would add a little pressure, giving a little lift to the US dollar as these markets start to fall apart a little bit, which would then lay credence to the fact that we will have a precipitation of sell orders that will drive this market down through these 2 price targets here towards this 119.84 area. This would be a nice little spot where we could see a little consolidation. You can see where we had some lows here, we had highs here, lows here. So for us to hit this target here as a key pivot, for us to bounce off of again perhaps, or set the bottom of a short-term range to develop for the next couple months. Like we got to remember right now, as we're coming out of lockdowns and what have you, we're looking at economic numbers that are skewed because they're comparing everything to last year. Well, everything looks rosy compared to last year. It's not hard to beat the numbers. The question is, where are they in line compared relative to 2019? That's the year to compare. So everything, no matter what, is down versus those years. And the thing is that markets are forward thinking, just like traders are, and they understand that reality, something that the news is not covering. So while you look at all the hype about, oh, we're beating expectations and the numbers are coming out, blah, 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 that's because, remember, last year everything was shut down. So be mindful of that. So you have my the little sell order that we went over here for the bearish engulfing line sell signal. After today's market action here, we have definitely lowered our stop. We had initially taken off a little bit of our position last week, and now we have another little part of the position left that we're holding out to get down to this area actually. So now we have lowered our stop because of today's market action. You don't want to turn a winner into a loser, and now that we've double dipped into our initial target, we definitely want to make sure that we are smart about how we play that trade. All right, now let's look at the British pound US dollar. Speaking of oil, gold, and interest rates, this is why we look at these other markets. Okay, so we had the sell signal that was in the Euro US dollar. Well, guess what we also had? We had one over here also. So let's get this a little bit easier to see. Okay, so this was also a bearish engulfing line sell signal. So here we have 2 markets which are the biggest components of the dollar index that have given us sell signals this week. So what does that mean? Well, I'll tell you what that means. That means there's a good reason for a dollar strength to come into the market if the two largest components, just by that factor alone, just having a small correction in the euro and the pound, that would give the dollar index a lift. So we will definitely be seeing that come the next couple of days, I would assume, because of what's going on right now. Now, the key thing to notice here is that we have 2 days ago we set this. Now we're in this trade too. So once again, this is a bearish engulfing line. The close was $1.4145. We actually sold it a little bit lower the following day as the market turned at $1.4140. So we're a few pips below the initial entry price that you would take or try to get. With that, our risk, our stop is actually just above this at 142.55. So that's our risk. We're looking for a downside correction that goes all the way down to this area, right around here. Right around $39.57. So now the one problem with this trade is that this is not only just a counter trend trade. This, now remember, the British pound US dollar has been a raging bull against the dollar for over a year now. This consolidation over the past few months was nothing more than that. You can view it as basing. Now the question is, are we going to continue to climb higher, or are we going to continue to climb lower? Well, I think that the major thing you have to look at is that on the short run, we're just kind of coming back down towards this upward sloping support line. There's no reason not to do that. If we do get an extended sell-off towards my target, and hopefully we do, because I'd like to be profitable, the key level that we'll look out is this $40.06. If we take out this low right here, it's very likely that we will hit this target right here. Could that be the extreme? Who knows? We'll see. But once you get into this area, you can see where it gets very kind of toppy right here. A lot of resistance. Resistance becomes support. So that's really what we're looking for, is this to become support right here. No major turn in trend for the pound versus the dollar. The only thing that I could see that would really have the pound sell off in a major way, extending the lower targets, would be if you have a severe slide in interest rate pricing in the 30-year Treasury bond and 10-year notes in the United States, meaning rates going up. That'd be favorable to the dollar. Then also a tremendous sell-off in gold as well. Multiple reasons why a lower gold market would lift strength to the dollar versus the pound. And then there's also if oil was to retrace back down towards 60 or below 60 bucks a barrel. Those would be the things that would be necessary to facilitate a huge slide here. I don't believe that you're going to see the sell-off in oil. The interest rate thing is very plausible and probable, but right now we'll see how what the Fed does. They had a hands-off policy that they were staunch about up until a month ago of doing nothing and keeping rates super low. Now they are not so much on that page anymore, which came out of nowhere just 2 weeks ago, because it doesn't make any sense. And these are things we need to be paying attention to when it comes to the currency markets, because they're going to influence the currency pricing, especially with the U.S. dollar. So British pound, U.S. dollar, we're looking to target down into this little area right here. I think that over the course of the next week or so, it's very likely that we'll come into this area. Most likely going to see a bounce here. Not expecting to see any really heavy selling that will get us down below $1.3957. You never know. Also, one thing's for sure, be careful, all you aggressive bears. Remember, like I said, this market is a bull. Should we snap back and hit this $42.51 level? Let me tell you something. Below here, could we be selling off? It's a big question mark. Below 140.69, how much we'd be able to sell off. Should we get above here at a $42.51? Well, guess what? We're going up to like $1.44 half. Like, especially if oil breaks out to the upside and starts to trade above $70 a barrel, and if gold gets a bounce and starts to head back up to its highs, And especially if the bonds get a rally, meaning interest rates come off a little bit in the U.S., we could very easily see $1.44 in the British pound U.S. dollar, even $1.45, $1.46 in a very relatively short amount of time. We could see a big leg up. Like, think about this. This went from $1.35 all the way up to $1.42, all in the course of just 2.5 weeks. That's the kind of move we could see happen, forming around this base here, and then boom. So basically $1.39. That would put us all the way, if it was even remotely like this, up to like $1.47. So that's even beyond my upside targets. So we'll see how these things manifest. We're coming into the end of this trading week. Tomorrow is unemployment. We're expecting a big day. Now here we go. This is a key confirmation of dollar strength again versus the European basket of currencies. Taking out this current lower move high after making a higher move low, puts us on the neutral path for the US dollar Swiss. This is something that we were talking about yesterday in our video, that we needed a move. We were expecting it to challenge resistance. We're not expecting any major rally here. 91 cents around here is our price target in the short run. And the key is, what happens with the gold market? Should gold sell off significantly? If oil once again continues to rally, then there's a very good chance that besides hitting around this 91 cent area, that the US dollar Swiss could get up to around 92 cents. Now, we don't have any buy signal here. We just know what the market's doing. In the longer term trend right here is definitely bearish. As far as being a bull, you're looking something, this has just been happening over the past week, and it's viewed as an upside correction right now. I would not get too overzealous about being a bull in the US dollar Swiss. Not that we can't have a nice little ride up past this 91 cent area up towards 92 cents even. But that would be, once again, if we would start to see a really big sell-off in the euro US dollar, a continuation of that trend lower, and if the pound would go down to that area, target area, like I showed you in the last on the last screen, those are things that could definitely help to drive the Swiss up to this 92 cents to 93 cents area. So we'll have to keep on monitoring that. All we know is that after having made a lower move high and a higher move low, and now we're making higher move highs, the short run hourly and daily is definitely an aggressive bull. I would use this 89.46 area as your risk level. Anything below here will have us definitely hunting for new lows, and above where we are right now, I have to say, most likely will help to hold the bulls in place and keep the momentum strong. Very likely we could see a choppy trade start to develop around 91 cents though. All right, let's go to the US dollar JPY. Let's see, do we have any more questions? Just a couple. Thank you. Hey, thank you very much for that. Appreciate that. Okay, cool. We're moving on. All right. US dollar yen. Well, this is a no-brainer. Oil made new highs over the past 2 days. Gold has a big sell-off today. Yeah, this is right now, dollar strength is creeping in. I would use a lot of caution as we come closer to this multi-month high over here. If we breach this area, the odds of us climbing to, like, say, 112, 113 become very probable. Once again, as long as oil remains firm, as long as the interest rates in the U.S. remain firm and looking to get even firmer, meaning lower bond prices, that's adding more pressure to the upside. So even if we have, I'm viewing the European currencies, especially the pound and the euro, as a or definitely the pound as a short-term correction. We could eventually see dollar weakness come back in to play very quickly over the next week or so. In certain markets, for sure, it will be very blatant, especially like with the pound, possibly even with the Canada. But when it comes to the US dollar yen, it would take a significant sell-off in oil and a very big reduction in interest rates to start to turn the US dollar yen into a bear. Right now, all the components that are bullish dollar and bearish yen are in place right now. So as far as upside targets right now, we're looking for a challenge of this $10.97 area. As far as risk, I would say if you are a bull or a bear rather, definitely you don't want to be short below 110.97 because you're just going to get slammed as this market explodes to new highs. Now, if you are a bear here, a bull here, and you are thinking you're going to have a big turn of events, well, you have to take out this area of 108.57 first to even remotely get back on the neutral campaign, which could possibly happen. Let's say we do start to develop a range trade. What would be the area? Well, then most likely it would be somewhere contained within this area here. Should we fall back into it, we'll see what happens. I don't believe that that's what's going to happen. I believe that we are actually going to continue to trend higher. However, should we fall back on support, we're not looking for any major sell-off. The only thing that really I think would do that would be should we take out this low here of about 107.5, then I can see us getting back down to the 106, even 105.5 area. Very, very unlikely though. The only way I see that happening would be should we have, once again, a major sell-off in oil and a major rally in the bond market, and then also that would we would need to have a big rally in, well, I don't know, gold. Gold's a tough one on this one, just because I don't see it having any adverse trend for quite some time. But those two components, unemployment tomorrow will be a number that could jar the US dollar yen in a big way. So remember, unemployment claims came out very favorable today. Market's not reacting very well to it though. That's because the market is forward thinking and realistic thinking also as well. So it doesn't matter what kind of puffery the media tries and spin they try and put on it, or the government does. Traders look at the bottom line, and so do the markets. So, and they're very unforgiving when it comes to dealing with real realities. So watch those trends. There's other markets too. The CRB index is exploding to the upside again. We had a nice slide in some real commodities like wheat, the grains and the meats, and now the grains are flying once again to the upside. Why, once again, am I mentioning these other markets? Because these markets definitely have a factor involved with currency pricing, and also as far as what other currencies do as well. You got to remember that the cost of everything around the globe is exploding. Inflation is exploding everywhere, even for U.S. goods. You got to remember that we also supply things to the rest of the world. Our goods are becoming more expensive. So especially right now, a dollar rally makes coming out of this time, if you will, of the pandemic, one of the worst times for us to have a dollar rally, actually, honestly, is right now. If anything, we'd want to have a dollar slide to make our exports more favorable and make other things work out better for us in the short run, especially to fuel things while we get the engines back online. We'll see how things pan out, but the way I'm looking at it now, especially if we have a significant dollar rally over the next month and a half, it's going to slow a lot of our exports. It's going to probably creep into earnings come the third quarter, which that's going to be big for us on the year, because once we get to third quarter, we want to know, are we really coming out of the pandemic? You know, we can't use the excuses of the pandemic anymore come a year from now. So, and once again, the real question is, are we beating 2019 numbers? Well, I'll tell you what, inflation at the rate that it's going, you cannot possibly tell me that with profitability still not, sales and momentum of markets not being where they were even remotely a year ago, that we are going to come out of this just smelling like roses and shining brightly. The reality of things is going to kick. And the good thing is for us as traders, we're going to have a lot of volatility. So US dollar yen, once again, only unless we fall below this initial pivot right here do we start to look for any type of correction, and even still very, very unlikely. Now let's check out something that is amazing. Look at this, Australian dollar, US dollar. This shows you the strength of the dollar right now. We haven't had, except for this move here, any real selling capacity. It's just not really there. We've been churning and burning. It's been just a range trader's delight. Talk about a nightmare of a trade. Still, we have no signal. Short run, this obviously has now become bearish. I would use a lot of caution. It's very likely that even if the dollar becomes a big bull for a while, that this settles and just stays in a very sideways chop. I think this, because of Gold's, see, there's a mixed bag of goods here. Gold selling off like it did today could be the main reason the Australian dollar, US dollar is selling off. So I wouldn't get too dollar bullish when it comes to the Australian dollar, US dollar. So the key is that we did take out these lows right here, making lower move lows after lower move highs. But when you really look at it, we're just in a big sideways. You know, like this market here basically has been trading between there and here for the past 6 months. So and right now we're in the middle of the range. So use a lot of caution when it comes to Australian dollar, US dollar. Wait for a signal. We don't have one for you right now, so it's not to be wishy-washy, but never try and force a trade. If there isn't one there, there isn't one there. There just is not one for the Australian dollar, US dollar right now. Now, Australian dollar versus some other crosses, perhaps. So like you look at Australian dollar, JPY, let's see what's going on here. Okay. This one here, there's been some trending. This is something where you can probably get some action on, maybe some potential swing trades over the next couple months, but not when it comes to the US dollar. New Zealand dollar, US dollar, look at this. This one isn't making lower move lows. This one's been trading higher now for the past couple months a little bit, where the Australian has been really more of a sideways trade. So higher move highs, higher move lows have consistently been made. The key is, will we take out this low or this low? Should we do that, then I think we're going to have a little bit of trouble. But then again, look at this one. This one's been very similar to the Australian dollar, where as a whole, it's been trading between a range of somewhere around here for the past 6 months. Spiking up, falling back into it, spiking out, and then back into it. And right now, we're still basically in the middle of the range. This is another market. Wait for a signal, guys. There's just nothing there. So we got one more FX currency to cross to look at, unless you guys got some questions about any of these. Let me see. Double check the chat on YouTube. Thanks for the like. Really appreciate it. And I want to thank you for that very, very much. And okay, so no more questions there. All right. Okay, cool. All right, guys. Well, then we'll move on to the US dollar Canada before we get into the crypto space, which I know you guys want to hear about. Here's one. Talk about a little bit of an interesting trade. This is a bear. The US dollar Canada is a long-term bear, has been bearish for over a year. It's been pounding the dollar, grinding it lower. There's been a lot of talk that we're going to start to round out a bottom. Is that possible? Anything's possible. Is it going to happen? Who knows? Maybe it will. Right now, we still have been making lower move lows and lower move highs. 2 days ago, we set a lower move low. This is, I would say, the base. If you are a bull right now, or you want to try and catch a falling knife, which is what you would be doing by buying this market right now, this is your key pivot. If we fall below here, make sure you got your stops in place, because there are all the week longs stops will be there. And especially should oil break out to the upside, it is very likely that US dollar Canada will be hammering support. I would say that today this is a dollar driven thing. This is a profit-taking rally that's going on in the US dollar Canada. Probably a lot of US dollar Canada shorts because of what's going on with the dollar and other markets. It's most likely that they're taking profit today. And there's probably some people nibbling and trying to buy at this market because it is a low-risk buy. You know, I mean, right now it's trading, you basically risk $1, but where would you be looking to go to? Well, even if we just did a 50% from this last leg down right here, there's a nice little move that could manifest. Here's the one problem, though. The only way I see us getting up to this corrected area right here, which is very possible. I mean, this would be a good correction. I mean, just we haven't had one in a while to begin with. Like here, let's see, this one went from $1.2580 up to $1.2880. So basically 3 handles. So from here, 120 up to 123. That would put us right into the bottom of this trading range. That would be symmetrical with this rally here, symmetrical with this correction here. So for us to get up into this area, very, 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 very possible. Okay. Is it likely that we're going to do it? Yeah, that's where I have a lot of trouble with this one, folks. The only way I can see the US dollar Canada really stretching a correction up to here would be for the following three reasons. Oil would have to get back down to around 60 bucks a barrel right off the bat. It can't be flirting with a $70 breakout. That can't be happening. Another thing that would have to happen would be a big rally once again in the Treasury bond market, meaning lower rates, not higher rates. That would be something that could buffer it as well. And as far as the gold market, it has nothing to do with it. Nothing really at all. So that really doesn't. I mean, to some degree, I guess you could say that a turn in gold could give a little strength to the U.S. dollar, and that would be that value there. But as far as the U.S. dollar Canada as a whole, I don't see that really impacting it as much. It's more the oil, especially because Canada is a big producer of oil, and then there's also the interest rate trade. So for this one, potential correction up to $1.2233. So if you think about you're risking $1 to make three, a 3-to-1 profit to risk ratio, very good potential there. However, we haven't had anything to confirm any reason why this would happen. We're coming off of lower move lows, lower move high, lower move low, lower move high, lower move low. So here's this low that's supporting it. We would have to take out this high first from a week ago at 121.43 just to get us on the neutral path. Not even bullish, because that would be a higher move high after a lower move low. All that would set us up would be to go sideways. For us to really think that we're going to get bullish, we would have to take out this area right here. So 122.07. This is going to be a lot of resistance here. I don't really see us really getting into any major breakout, but anything can happen. There is a good, like I said, reward to risk ratio here. All right, now let's look at the BTCUSD coming at you here. All right, BTCUSD. We have Bitcoin that is trying to get a little rally going here. It's had actually rather tight ranges for the past few sessions. A lot of mixed news in that market. So we're keying off of the fact that we are coming off of a lower move high and a higher move low. The question is, will we break out? So Bitcoin right now is winding its coil. For all the bears out there that are saying, oh, cryptocurrencies are going to die, and now Biden's jumping on the crypto bandwagon like China, which, oh, he's just listening to them about how they're going to make it illegal and whatever. So, but I would be very cautious with that one, considering that we just had the Coinbase release into the stock market, meaning that now we have a regulated crypto business out there. More and more of them are going to be coming online. We have them in Europe as well. So the fact that those companies do exist means that we're probably going to put the screws to other ones to do the same, to become somewhat regulated and watchdogged. Remember, no matter what, even though the crypto kids said we're going to create cryptocurrencies so we don't have to pay taxes on all the money we're going to make, well, yeah, that just doesn't jive with any government around the world for very long. So eventually they're going to come after you one way or another, or that industry. That's what's going on. We'll see what happens. But right now we're looking for an upside breakout. I think it's very likely that this could still happen. A lot of people are saying, oh, Bitcoin's going to go back down into the upper 20,000 area and bobble around there. That could happen as well. However, we've had a lot of consolidation now over the past couple of weeks. The volatility is not very extreme, and the ranges are getting tighter. If we fall below 33,547 here, then I would be very hard-pressed to say that it's unlikely that we're going to see a big bounce in Bitcoin until after we do trudge back down into the upper 20,000 handle. So as far as pricing, up or down, the trend is your friend. Short term, this thing is a bear. Key off of these levels. A failure from 33,547, or basically 33,500, would confirm a lower move low after a lower move high. So unless we take out this other high here at 41,000, we are in a neutral stance right now, looking for a breakout to the upside. If it doesn't happen and we have a failure at support, that confirms weakness. That would probably also play into some other cryptos. Let's look at Monero. Monero is having a nice little breakout to the upside. Notice that this market is coming off of a lower move low, lower move high, higher move low, lower move high, and then, excuse me, lower move low, lower move high, higher move low, lower move high, and then higher move low, now higher move high. So it's kind of neutral, but in the short run, now it's starting to get bullish. If this is setting the lead for the crypto base as a trend to continue, we won't see a failure from this 220 mark. This will be the nice base of support here. Trading above here keeps us bullish, looking for a challenge back up to this 360 to 400 level. Is it going to be just a correction to the upside or a resumption of the trend? I don't know. We'll see. Right now, I think what we have had is obviously a correction. And the question is, are we basing or are we getting ready to have another big sell-off? Right now, I think what we've done is we've set a nice base. And I do believe that if anything, we're going to raise the trend up into this little area here and then have some more consolidation. Am I looking for us to explode and take out the all-time highs here below 520? Eventually, I think it's very possible. Do I think it's going to happen in the short run? Probably not. I think right now we're looking for just more a short-term rally. So, and anyhow, let's get to this question here. Okay, that's good. All right, so now let's go on to Ethercoin, or Ethereum rather. Ethereum has not made a higher move high, but it is trying to do so. So we're going to key off of this little area here. Should it break out to the upside, that would confirm strength just like XMR and Monero did. This is the same thing. It's coming off of a low. Now this is interesting. Came down here, lower move low, lower move high, lower move low, lower move high, higher move low. Now we're just flirting with the breakout. This is the key. Should we break out from this little area here over the next couple sessions, that it is going to help give us a little bit of a strength for our scenario for Monero also. Does that mean Bitcoin's going to get a big rally? Not necessarily. Remember, Bitcoin is trading at such higher levels. It's an older market as well. These markets had their run up when Bitcoin had its big run up. They peaked out here. You got to remember, all these markets here more than doubled in just a period of a couple months, and that's coming off of the trend to begin with, which is bullish. So this sell-off is not just profit taking, it's very healthy for all of these markets, whether what your opinion is as far as their viability or not. Now remember, as far as technology, Bitcoin blockchain has some viability, so no matter what they talk about shutting down, the technology itself does have value. And even when it comes to the outlook of what Biden and what have you is going to do as far as cryptocurrencies, I don't really see that, like I said, since their arms are now tangled in the financial system, that they're just going to pull the cord. If they were going to do that, that should have been done a while ago. To do it now would be a little foolish. I mean, not that they wouldn't taper things off or at least start to regulate certain things. That's what I think is more likely going to be the path. We'll see how it goes. So Ethereum looking for a breakout. Now let's look at the Dogecoin. Everybody wants to know what's going on with Dogecoin after the last 3 days of rallying and rallying and rallying. Even today we heard about, oh my gosh, Dogecoin, there's so much interest in it. It's going to be on Coinbase soon. So pretty soon it's not just in the Robinhood and a couple of other places. You're going to be able to go to Coinbase, which is a regulated institution now. Well, not institution, regulated company. It's not an institution. So, but it's going to give you the ability to start trading that. So all the crypto kids we know are into it. Remember though, unlike Ethereum, even Bitcoin, even Monero or something like Ripple, those all have technologies that can be used for transactions and all kinds of other things that are the premise behind the true, supposedly intrinsic value for cryptocurrencies. The technologies and for Dogecoin though is more riding the fad idea and the meme stock wave. There's a lot of now I wouldn't just say hot air, but useless technology. The question is, would Dogecoin be accepted in the long run, or will it, and would it be viable for most industries? that's the problem. It may be more selective in who would really benefit from that technology or is most likely going to use that technology. And unless you have a real true global demand, it's going to be hard to see how Dogecoin could really continue on any major value like some of the other currencies. Remember, this one exploded just like the other ones. It still is under $1 versus where the other ones went from hundreds of dollars to multiple thousands of dollars. Obviously, things are relative, but the reality is, where does the capital flow come in? I'm not saying that this is bad just because the kids are the main investors in it. However, what I do see it is most people, I think, are getting into Dogecoin because they're saying, hey, I didn't get into Bitcoin when it was 50 cents, $1, $5, $10, even $50, you know. So, and people are looking at like, hey, I'll put a couple $100 or a couple $1,000 in the Dogecoin, and 5-10 years from now, I'm going to be a billionaire. That may happen, who knows? But however, it's very, very unlikely that such a thing is going to occur. If it does, then I guess you're gonna if the relative value between Dogecoin and these other currencies, if it truly does exist, then you're looking at it a valuation for some of these other cryptocurrencies that would be off the chart. So I mean, think about that. Would definitely put Bitcoin at above $1 million. It would put Ethereum up in the multiple hundreds of thousands of dollars, Monero, a couple other ones. And there is, I wouldn't say a cap, but a selective trend in growth rate for many of these crypto assets, not just to keep them viable and sustainable, but it's just the reality of the growth model. Certain ones, there's just no reason except for more buyers than sellers to drive up the price too extreme. Now, as things start to go where funds can start to get into these assets, that also pools a lot of things. And we have to see how that goes too, because just because funds start buying and hedge funds start buying into these things doesn't mean they can't sell out of them as well. And they come in with resources that the average individual does not. So be mindful of this when you're trading the cryptocurrencies. So while we have Bitcoin going a little higher, being a little neutral to higher, we got Ethereum and Monero that are pushing resistance. We have Dogecoin that's coming off a little bit. Is it going to break? Is it what's going to happen? Now here's what the trend is. Remember, lower move lows, lower move highs. We came into a lower move high, higher move low, lower move high, higher move low. Now we broke out this. This is a short-term neutral bull. Long term it's a bull. Medium term it's a bull. Short run, it's more neutral, unless you're looking at the hourly and daily. That's kind of bullish, but I would use caution with this one here. But we'll key off these levels. Should we get a slide below 28 cents, this is critical. Any failure here is not boding well for Dogecoin. I think it's kind of funny. I don't know if it's there's certain numbers that just seem to gravitate and seem to be common with people's heads. 30 cents seems to be the number for Dogecoin, where you have a lot of people that are willing to buy it and come in to buy it. You can see this little explosive rally here to 10 cents. It's amazing what 10 cents means, and when you're talking about literally these small amounts of money, as far as when you buy in volume. So a run up like this today could be just profit taking, common sense coming into the market. Who knows? We'll see. But right now, I would use this 28 cents basically as 28.30 as a base for any support for this market in the longer run. Should we fail from there, I think you're going to have a big problem with this market, at least in the short run, because that would confirm that it's in a bear market. You know, this could be the top up here, and we could be trading lower for the next 6 months before we see a big rally. So let's put this in here. See, the slope was very steep. Now let's put this in here. So these are our levels to key off of. So above 44, basically 45 cents, we become very bullish, looking for another run up towards this at least 60 cents area to challenge the highs above 70 cents. So very interesting what's going on in the crypto space. Let's look at the Euro US dollar where we started off. Oh, look at that, folks. We're making new lows, and we are pushing in the boundary here. The US dollar is definitely getting a big rally today. So do we have any questions with any of you guys? It looks like there's no questions with any of you guys today except for the earlier ones. which is no big deal. No big deal at all. Do you guys, nothing out there, the viewers, no questions about what's going on, anything we've covered? All right, so let's go over to signals real quick, something that's reinforcing this dollar rally. Euro US dollar bullish and bearish engulfing line was signaled a week and a half ago. Boom, this has set off this trend. We are making lower move lows. Then we have the British pound US dollar that gave us a bearish engulfing line sell signal 2 days ago. So this was followed up. So a week ago we had it in the euro. This is kind of where we had resistance. Then boom, we spiked higher in the pound. We got this little sell signal. It's on its lows right now. Look at this also. It's keying off of right here. It's coming really close to flirting with lower move low after a higher move high. That would put us at least on the neutral campaign for the British pound US dollar. We'll see how things manifest over the course of the next few sessions. But it looks like today that we really are nailing this dollar bull thing right now. Just for compliance, to let you know, I do not own Dogecoin. I do own a little Bitcoin, a little Monero, and a little Ethereum. I am also short the British pound US dollar from yesterday, a little bit below where I wanted to get in because that was just where the market was at. Had to react, you know, which how the trade setup is. And I'm also still short a little bit of the Euro US dollar. That's been kind of dangling, and I've been taking heat on for the most of the last week. But now today we are back in the black, which is good, very, very good. So I want to thank all of you guys for your time today. Since you have no questions, I want to remind you real quick to if you haven't done so already, subscribe to our YouTube and Twitch channel, Forex Trading Unlocked. Check us out on LinkedIn, and also make sure you check out the High Probable Japanese Candlestick Patterns book, available on Amazon.com in paperback and Kindle version, written by yours truly. And if you read that book, then you'll know how to trade these bearish engulfing line sell signals for yourself, which you can apply to multiple markets and multiple time frames. It's all written down there for you, and the chapter on money management alone is worth the price of admission. Folks, if anything, if you don't have good money management principles and understand it, that chapter alone will save you all kinds of money no matter what markets you trade. So have a great trading day. We look forward to seeing you again soon. Please leave some comments for the videos if you want us to answer your questions if we haven't done so already, and always pass it on to your friends and help grow the Forex Trading Unlocked army. So you guys have a great